Master your mind. Winning the hidden game of trading. Picture a quiet Tuesday. 3 monitors glowing, coffee cooling beside the mouse. I had spent weeks back testing a breakout system, and that morning every confluence seemed to shout double size. 10 minutes later the chart snapped back and liquidated my account. I didn't slam the desk or curse the market. I froze. In that silence I realized the market hadn't beaten me. My own mind had. I had watched myself wreck a plan in slow motion and felt powerless to stop it. If you have ever stared at the screen while your rational brain whispered stop, and your clicking finger shouted go, you already know the hidden game. Before we start, a quick reality check. This video is education, not financial advice. Markets are risky. Never trade money you can't afford to lose. Good? Roll your shoulders back, take a slow breath, and think about the last trade you took. Was it perfectly planned or the tiniest bit impulsive? If you hesitated answering, today is for you. There are always 2 traders sharing your chair. One is the professional. Calm, checklist-driven, respectful of risk. The other is the gambler. Thrill-seeking, FOMO-hungry, allergic to boredom. Every click casts a vote for one of them. Our mission is to keep the professional at the controls when money's on the line. First, we need to expose the emotional traps that hijack even the smartest minds. Trap 1 is fear. Fear whispers, what if it tanks? And convinces you to slash winners the moment they pull back or to skip a flawless A+ setup because you don't feel it. Right now, try a tiny drill. Imagine your next trade and say the exact dollar risk aloud. Yes, actually whisper it. Then breathe in for 4 counts, hold for 4, breathe out for 4. Accepting risk out loud shrinks fear's leverage. Trap 2 is greed. Greed isn't genuine hunger for money. It's the refusal to feel satisfied. You're up $300 and suddenly crave $600. You hold, watch the price fade, and end up break even or worse. Decide a daily profit cap. Write the number on a post-it. And promise yourself you will close the platform the moment you hit it. Profit is a paycheck, not permission to gamble. Trap 3 is revenge. A trade goes red, anger boils, you double size to get it back. And the hole deepens. Install a loss-triggered timer. Any loss 1.5 times your normal amount means standing up, leaving the screen for 15 minutes, and logging what you feel. Do not re-enter while that timer ticks. Treat it like a seat belt. It's only annoying until it saves your life. Trap 4 is boredom. A quiet market feels like an empty fridge. You keep opening it hoping something tasty appears. Define a maximum number of trades per day and build a physical checklist. If the setup doesn't tick every box, you cannot trade it. Dopamine starvation ends here. Emotions calm? Good. Biases still lurk. Confirmation bias makes you see only evidence that agrees with your trade. Anchoring glues you to a target price so stubbornly that you ignore the structure screaming exit now. The sunk cost fallacy begs you to hold a loser because you've already waited this long. You can't trust your raw perceptions, so you need systems that override them. Motivation is a mood. Discipline is architecture. Build 3 walls around every session. Wall 1 is a pre-market checklist. Sleep rating, economic calendar, key levels, emotional scale from 1 to 5. Leave 1 box blank and you don't trade. Wall 2 is a 90-minute session timer. Professionals work in focused blocks, not marathon screen staring. When the buzzer goes, the platform closes. Green, red or flat. Wall 3 is the post-trade journal. Log the setup, the emotion from 0 to 10, note which rule you kept or broke, and write 1 tweak for next time. 10 honest entries will reveal patterns no indicator can show you. Let's make that journal concrete. After this video, screenshot your next trade and write 4 lines. Setup, emotion, rule kept or broken, 1 tweak. Then save the screenshot in a folder called Mirror. Every Sunday open the folder and read the week as if it belonged to somebody else. Detachment breeds insight. Drawdowns hurt not simply because of the money but because they attack identity. Decide how you will behave before the pain starts. When equity is down 5%, cut position size to micro lots. At 7%, switch to simulation until you print 3 rule-perfect green days. These numbers aren't magic. They are obedience drills that stop the desperate strategy rewrites that kill accounts. Trading can morph into a behavioral addiction. Uncertain reward, endless stimulus, no closing bell for the mind. Schedule at least 1 chart-free day every week. When your session timer dings, shut the screens and physically leave the room. Freedom is not staring at candles all day. It's the power to walk away. Charts can become walls that isolate you from anyone who doesn't speak candlestick. Find 1 accountability partner. Swap journals once a week. Isolation breeds delusion. Conversation breeds clarity. If you don't know anyone yet, Scan the comment section of this video and type partner beneath someone's post. Two traders keeping each other honest can short-circuit months of self-sabotage. Now grab a sheet of paper and draft your trader constitution. 5 rules you refuse to break. Your daily loss limit, your profit cap, your trading window, your checklist requirement, your journaling habit. Sign and date it. Tape it to your monitor. Every click henceforth is a contract with the trader you're becoming. Time for a quick self-audit. Recall the last month of trades. How often did the gambler, not the professional, click your mouse? If that number stings, use the pain. Pick one rule from your constitution and declare it publicly in the comments. Public vows turn wishes into standards. Next, let's run a lightning bias quiz. I'll name a bias. Snap your fingers if you've done it. Confirmation bias. Ever cherry-pick news after entering a trade? Snap. Anchoring. Ever cling to a target price that the market keeps rejecting? Snap. Sunk cost. Ever hold simply because you've waited this long? Snap. If you snap 3 times, congratulations. You're human. Awareness is step 1. The checklist and journal supply steps 2 and 3. Let's address screen fatigue. Endless candles drain emotional capital even if you never click. Try a micro habit right now. Lift your eyes off the screen to a wall, focus on a far object for 10 seconds, then blink slowly. That small reset lowers cortisol and increases discipline. Sprinkle these micro breaks every 30 minutes. We also need a ritual for the end of day. When your timer buzzes, close the platform, write 1 victory. Process, not profit. Then physically push your chair back and touch the doorframe before switching tasks. Rituals train the nervous system to exit trading mode. A mind that never leaves the market cannot recharge. Let's talk about identity. Results follow belief. If you secretly believe you're the trader who always messes up after 2 wins, you will execute that script without noticing. Rewrite it. Say, I am the trader who follows process no matter what I feel. Write that line above your monitor. Read it before each session until it stops feeling like a lie. Now a brief word on comparison. You may have seen screenshots of giant payouts. 6-figure challenges passed in weeks. And wondered, why not me? Remember, you're seeing highlight reels, not practice tapes. The traders posting those numbers survived years of journaling, size reduction, and lonely resets. Respect your own mileage. Your path is the only scoreboard that matters. Let's test your professional versus gambler ratio. Mentally answer 4 questions. 1. Do you move stops after entry? 2. Do you ever add to losers? 3. Do you widen targets when price gets close but not quite there? 4. Do you open charts outside your trading window? For each yes, add 1 gambler point. 0 or 1 point, you're operating mainly as the professional. 2 or 3, you're in transition. Double down on systems. 4 points means the gambler is driving. Good news. Today gave you every tool you need to take back the wheel. Time for the chart-free challenge. Pick a colored emoji. Any color. And post it in the comments the first day you stay off all live charts for 24 hours. Let's flood the thread with color and hold each other accountable. We're almost done, but I want you to cement one tactile memory. Ball your fist. Now open it slowly while saying, I release the outcome. That gesture seems silly until a live trade is running. Repeat it then and feel the tension dissolve. Tiny anchors save large accounts. Let's review the concrete takeaways in a single breath. Accept risk allowed, cap profits, timer out revenge, limit trades, checklist every entry, journal every exit, cut size at 5%, switch to sim at 7, chart free days, accountability partner, signed constitution. If breathless, good. That's your new playbook. The hidden game was never predicting price. It's mastering the space between stimulus and response. Markets reward consistency, not brilliance. If today shifted your mindset even 1 degree, hit like so YouTube knows traders need this content. Subscribe for weekly drills that sharpen discipline, and share the video with a friend who still blames indicators for every loss. So let's seal all of this with a sentence that's guided some of the greatest traders in history. Paul Tudor Jones once said, "The whole secret to winning in trading is to have an indefatigable and unquenchable thirst for information and knowledge." Let that thirst drive your journaling, your checklists, your chart-free reflection days, and every small habit you signed into your trader constitution. Knowledge about the market matters. But knowledge about your own mind is the edge that compounds forever. Screens off, shoulders back, and trade like the disciplined professional you just chose to become. I'll see you on the next battlefield.